following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a great weekend. We're going to hit the usual suspects really quick. We're going to take a look at the 10-year, something I'm always interested in. And this is our daily. And as we look at this, we talked about, initial targets being that 133 area. We've hit that. We backed off a little bit. It's just, man, it's amazing how turning the wrench the same way, looking at what's going on in the markets in general, keeping your eye on some of the things going on with the Fed, and taking a look at the S&Ps as we look at it today. Gapping up last night and coming back into support on the 2170 area, that general area. You take a look at the 10-year and you try to always find, what's the easier trade out there. And the easier trade, instead of trying to time the S&Ps, we've talked about the S&Ps possibly going north again, but, the 10-year on support, man, you really can't go wrong with this thing. You can, every once in a while it's not going to work out, but in general terms, looking back at the long term, 10-year trade, Tom talks about this all the time. These things have been in a bull run since God knows when. And when you're looking at trying to find, best use of mental capital and physical capital, I don't think you've found a better instrument to really show itself. And drilling down to the stock market and finding instruments that are showing themselves relative to, what is the 10-year trade, what is the S&P trade right now, what's not cooperating, what is cooperating. That's always the way I look at markets. It's a proven method, and the specialist generally runs his book like that in New York. So not trying to fight the Methuselahs of the world there. Let's take a look at crude oil. Interesting thing happening today, gap up, sell off a little bit, but, we talked about just waiting until we had some new things to lean on. You're going to have those more than likely tomorrow. Here's the 240s. Again, we talked about turning the wrench the same way, trying to find resistance as this thing continues to trail down. But now you've got a hint of a new profile attempting to appear on the September contract in crude. So again, you look at this, you look at where the break started, and you also factor in where Goldman Sachs went long. I think they're saying something else this morning. What are they saying? Because we have to fade this every time. Goldman Sachs has cut its 3-month rating on equities to underweight, saying its risk appetite indicator has turned neutral. So that could be considered bullish for stocks. Just by the sole fact that they said something about it. 4173, 4073, top of the profile, bottom of the profile on the 10-year, on crude oil. These are all within the scanner. And, do you continue being short here right now? In my opinion, no, you don't, because you've got this new balanced area, and we could have some higher leverage points. You never know where these things are going to be. But just the fact that we've got a new demand area down below attempting to appear is something that you got to pay attention to. All right, so taking a look at gold. This has been, a really cool trade. Again, just like the 10-year, turn the wrench the same way. We're in a bull trend on gold right now. Support was at 13.15. We talked about that. really no reason to take this off. In fact, you've had profiles appear below price action, and that's bullish in general. So now you've got support at 1342.30, and that's where you'd be trying to pick a battle on gold. And I love how this thing is acting relative to the market going up, and also to the 10-year. I mean, if you get any type of currency disturbances here at all, again, just like we had on Brexit, which started this whole thing. And I'm going to go into the currencies really quick. That's not what I wanted to do. Let me go into the dollar here. So the dollar, obviously a little bit of a breakdown there. 95.76 was pretty big support on this. Gold repricing itself a little bit. We're going to come back to gold in just a little bit after we go through some of the usual suspects again that we always talk about. Here's silver. Zero reasons to short this thing. As you can see, we've talked about that. Nothing to really talk about that has changed. And we're going to hit copper really quick, the September contract. I always get emails about this, like, when will this thing explode? When will it change tone and start moving north? Again, you do have some support at 2.16, 2.17 on copper. Ultimate targets up top, 2.329. That's the situation on copper. We're going to hit Apple really quick just to kind of get some bellwethers out of the way. This one, you know, again, rolling the dice before earnings is it is what it is. I was a bigger fan of this continuing to trail off, but getting out of the market before earnings is something I like to do. Here's that 98.64 we were trying to lean against. Now the kind of horses out of the barn here a little bit, and you know, we're waiting for new information on Apple. Here's the daily. We don't have any yet. And again, getting out of these things before earnings a lot of times can save you some points. You can be right about 50% of the time rolling the dice beforehand, but you know the story. Sometimes these things can really take your head off if you're not prepared for it. We're going to hit Facebook. This is one you really don't want to short, in my opinion. You've got a new profile attempting to appear up higher here, so you're going to have some new support areas on Facebook. That hasn't happened yet. You should see those today on Facebook. Here's Amazon. Again, you know, using any forms of support here, 731.50, 732. Here's the daily. Now you've got support at 757, believe it or not. And I want you to look at the dailies really quick on Amazon. You know, we kind of look at the weekly, and then we kind of pair off into a time frame that's a little bit a lesser time frame to kind of regulate that trade up. Here's the dailies. As you can see, the profiles, really good places to pick battles. We've got another one right there. Now, you guys could possibly be thinking about the S&Ps, some kind of key reversal situation. We're going to talk about that a little bit when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. So, we're finishing up. I said something about, is this possibly kind of a gap up and reverse time for the S&Ps? Well, let's just take a look at some of the things that we need to look at before we start making that assessment. The internals on the weekly, I'm not going to say that we're overextended here. This is, again, the profile breadth calculations. A lot of these stocks are going to probably open up a little bit if the S&Ps open up a little bit. So there's the daily, here's the 4-hour. Been a little bit of a mixed bag on the short term, but you literally, when I see these two I'm going to pull up the TAS says really quick here. Long-term TAS breadth coincides with the intermediate breadth. That both are positive for the long term. Any retracements into 2101 from above would be looked at as primary long-term support. That's obviously already happened. And here we go. And for the intermediate, any retracement into 2169.57, so 2170 from above would be looked at as primary intermediate support. Blah, blah, blah. So when you look at the chart on the S&Ps, that intermediate situation, this is telling you as long as let's go back to the weekly. Let me confuse people more. Going back to the weekly and what we kind of have as an automated text for the breadth calculations, if we're still breadth positive on weekly and daily, which will probably be kind of hard pressed for that to happen, when we get back into 2101, 2105, that's to be looked at as support on the ultra long term. But if we start pulling back that far, we're more than likely going to get a new weekly profile, at least attempt to appear, which is going to be a whole nother sign in itself. But if you look at the daily, we're gapping up, we're pulling back. This is support, and, breadths are positive, and more than likely 2052 could, also be a support area. If those weeklies and dailies stay positive as far as the internals. So that's just the simplistic way that I look at things. If you guys are I hope you're listening to Basil and the rest, Larry, everybody else. I'm not going to name them all, but what I'm talking about. You get a lot of good bearings and biased opinions on this particular network. I'm just giving you where I personally would pick battles relative to all things considered. So, again, here we are. We've made new highs. We're coming back. I mean, also I got to look at, the situation. If I'm short, what am I thinking? Low rates, lower rates. Where do people put money right now? I mean, the internals are looking still great. Again, I think you still got to be buying support. And I think some of the numbers Tom had talked about, maybe 2,200, 2,220, somewhere up there, 2,199. I still don't think this is over. This has been an unbelievable move up. And this consolidation here that we've been going through after we kind of planed off here, again, I don't think this is over. And I'm a big fan of, making more money on the short side than the long side, just like a lot of traders out there get addicted to that. Again, you got to look at this for what it's worth. Don't try to outthink this thing. You got really good support around here too. Let's take a look across the globe really quick. Shanghai just stuck in the mud, nothing to really talk about there. But let's take a look at the Nikkei. Kind of planing up here above 16,429. There's our weekly. And again, I mean, this is the type of action that's usually headed higher. We're going to take a look at the yen really quick and a couple other currencies on the first part of the show here, as we usually do. Here's the yen trade. So, again, just to review here, not to beat a dead horse, we reached the targets up top, 107.71.72, and then I tried again at 105.23. I believe that daily unfair load, that didn't work out. That's okay. The big move has been made, and we're looking for, in my opinion, a chance to be long this again, even though we've been in a protracted downtrend. I think that 101.33 has been a really big area in the past. You've got to pay attention to it, and we're kind of getting down there again. Even though you really don't have any inflection points to seriously pay attention to, we could head a little lower. Maximum back up the truck area is 125 on the yen. How does that affect the Nikkei? Nikkei's holding up pretty well in the face of this. The yen chart goes higher. That's the devaluation of the yen, and that's the repricing possible mechanism of the Nikkei. So I think the Nikkei is holding up pretty well in the face of this. So that's the way I'm looking at that. The Australian dollar. Okay. So again, this is kind of more of a longer term trade. I'm not really looking at this as a day trading situation, but what do you have to hang on to here? Trying to play defense below 74.81 and then put some trailing stops in. Here's the daily on the Australian dollar, and there's not a real wide profile here on the daily, but again, I think 77 and above. 77.46 to be exact is your ultimate targets here. Here's the 240 minute. You do have some support around 75.49 into 75.69, so a little bit of a collection area there. Again, I'm a big fan of being long the Australian dollar and blocking out the short side right now. The euro, hadn't talked about this a lot. This has just been one trying to stay short with the hedge. Again, this thing's going to bounce around, but I think we ultimately are going to get past that 109 on the south side. The dollar getting hit here is not really helping us out, that particular trade. So let's take a look at IBM really quick. I want to hit this one. Let me see where we're at. Here we go. Nice. Okay, now this is a great example of, relative strength before the market really started, taking its next leg up here. IBM was just kind of compressing, really recovered well in the Brexit situation. That's why, using the scanner and finding these type of opportunities, things that are showing themselves early. Here's the support area in IBM 159.03. And we're going to take a look at the 30-year right after the break here. Netflix, going to hit this one. Obviously, some decent news. 88.35 and 89.10 is going to be support on this, but this stock could have acted much better to be qualified as a relatively strong stock. So again, people send emails about this one. I think you just stay away from this. There's not a lot of leverage on this one. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're looking at the 30-year, kind of a similar situation, literally as the 10-year. I'm terrified to short these particular treasuries. Market comes off. These treasuries seem to kind of get a bounce. Market goes sideways. They tend to rally. But again, this thing's like a feeding frenzy. Market loves lower rates. And, we've got some news out that GDP is possibly going to get lowered again. So, these are all kind of rate lowering environments when fundamental news comes out like that. So, the big things on the 30-year is 171 into 171.19 down below. But can this thing go higher? I actually believe it can. You've also got, John, you've got this kind of global arbitrage of rates going on. So again, I don't see that getting dismantled anytime soon. I know some folks on TFNN have been talking about rates rising and these treasuries selling off. But again, I mean, until we have some technical damage based, around some of the fundamental news, I don't really see these things being a short yet, if that makes any sense. Let's take a look at ExxonMobil. I don't mean to be so simplistic about it, John from Philadelphia. It's just, it is what it is. The market is determined. That's where the price is. I don't trade the 30-year. I like trading the 10-year. It's a little easier on my heart. If you guys have ever traded the 30-year, you know what I'm talking about. The exaggerated moves happen in the 30-year. So here's ExxonMobil. Not good news that came out. 86, 87, bottom of the profile here, has held pretty well on the long-term weekly. That's where I think you could play defense against this. Crude could rally a little bit. I don't know how much of a kind of a day trade in crude is going to affect ExxonMobil at this point. But again, I think you've got a chance to play defense on this. It's held up relatively well in the face of bad earnings and crude selling off. Let's see. Yeah, I stopped trying to overthink trading treasuries. It is what it is. And I apologize for being so simplistic about it. Treasuries are one of the harder things to trade on the planet, to try to figure out where rates are going to go and what the latest rhetoric is going to cause to happen. Right now, I kind of like the way Tom has kind of coined it. You've got this global arbitrage going on. You've got a relative trade going on. And, the U.S. is supposedly not a bad place to put money. But we all have different ideas about that concept. Here's UPS. Finally got a break in this on the downside. But again, kind of like ExxonMobil, you've met a 106.61 and bounced right off of it. What do you do with it now? Again, I mean, you've got a stock that's outperformed, that has pulled back to support. And again, I think you've got to be looking at these as buy opportunities on pullbacks. Let's take a look at ABBV, obviously in the healthcare sector. Going to the ETF XLV, and here we go. Wow. Top of the heap on the weekly and the daily. So looking at ABBV, green across the board, obviously had some decent earnings out. Looks like we're printing this morning 66.70. So what do you do with this? This is good action. Long-term stops below 63 on this, and intermediate stops below 65.41. Any pullbacks to those areas, I think you've got to be looking to purchase this particular stock. Spirit Airlines. Who has ridden on a Spirit Airlines flight? Anybody? Last time I went to Colombia, I flew on those guys. I think they charged me for a cup of water. I can't remember. Let me make sure. Kind of a wacky looking site too. I don't know if you guys have ever gone to their website. So, I'm sorry. Here we go. Actually, before we look at Spirit, I want to look at something else really quick here. Hold on, guys. My computer is locked up. Let's look at Merck while I'm waiting for my other computer to free up here. So, again, an XLV stock. It looks like are we printing this morning yet? Yeah, 58.66. So, again, has kind of pulled back on the daily to an inflection point and the weekly to an inflection point. And I want to show you this in the scanner. If we go down to Merck, it says top 5. So that means that we're coming down. We're coming down from above into the weekly unfair highs. And that top 58.50, there it is. And that's to be looked at support right now. Let's look at Google. Excuse me. Well, what do you do with this now? Here's the weekly on GOOG. Kind of getting above that area, but, you know, not rolling the dice before earnings. You wake up and you see this thing at 768. What do you do with it? There's really nowhere to play defense up here. Here's the 240s. You got a profile appearing below price action. You know that's relatively bullish. 753 is the top of the profile in the 240s. You gotta wait on this. I don't think you short it. I think you just wait for support on something like this. GNC, the most overpriced vitamins in the world. CEO resigns. I know you guys heard about this. Trading, looks like we're trading 2023 pre-market. What do you do with something like this? This is kind of the stock I think you just stay away from altogether. You got to have some things to lean on. Nothing down here. I had a couple of emails about this one. Ford. Okay, so is that a real print this morning? Yes, 1266. So again, we're coming down into the top of the profile on Ford. We're going to talk about this a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, here's Spirit Airlines, SAVE. Long term, again, you got support at 39.74. Hadn't really been performing well relative to the market. I have no idea how these guys make money. I literally went to Medellin, Colombia on this airlines. It was $168 round trip out of Fort Lauderdale, and I did pay for a cup of water, I believe, but at least they're saving on the water. But this is our 240s. This is something I don't know how in the world, just from my personal experience, that they're gonna break out here. This thing is cheap to fly on, but it's different, put it that way. There's nobody like on Southwest telling jokes and all that. They're to the bone. Check it out sometime. Let's take a look at Colgate. You're gonna have a new profile in the long term on Colgate today. That's gonna happen on the weekly. Here's the daily. It looks like we're printing 74 and some change this morning. A lot of these stocks, I'm gonna go back to the scanner for a second. That's funny, GL. Maybe that's why they started that route. Who knows? The hidden compartments and all that. Anyway, S&P. So one of the things I look at too is, I want to, and this is again in the 500 stocks in the S&P. here's the stocks in a so-called breakdown situation on weeklies or dailies. You've got some on here, but when you look at stocks in a downtrend, by definition, you don't have that many. You've got a handful, literally. Even downtrend resistance, you don't have a lot of these stocks even, excuse me, in a downtrend that are qualifying to poking their head up to resistance here. Let's take PRGO. This is your weekly here. God, this is a slow death. But again, I look at, here's Adobe. It's not a bad little situation here. 98.09 unfair highs on the weekly on Adobe. Viacom B. There's a daily. There's a weekly. It's not a bad situation. I don't like how this is compressing up into this profile, but again, it's without question not exactly trending up with the market lately. But I'll look at some of these custom sorts. Here's strong downtrend for stocks. So until you start seeing some of these custom sorts that are bearish start to get populated. In fact, here's uptrend reversals. There's 5 stocks. This will start getting really populated, this uptrend reversal, when you start seeing some cracks in the armor in the market, or when you when you're looking for cracks in the arm in the market. You'll start seeing, here's Whole Foods. We talked about that one. Here's Pulte Group. Here's the daily. This is why it's qualifying at this stage, but here's the weekly. There's the daily. There's that 2150. Be nice to get a retracement back up into there to short this. But again, not a lot of qualifiers when it comes to looking at some of these. And this is across all the NASDAQ and all the S&P 500 stocks. So I look at that. I try to, get an idea, if the internals are starting to change a little bit, and that's just seemingly not happening right now. So if you're wanting to get short, you don't, the real cool things that happen ahead of time is when you start seeing the breadth calculations roll over while we're kind of meandering around up high if you're looking to short something, and this is just not happening yet. And again, I kind of like Tom's numbers up top of this thing to go a little bit harder. And this, all these may coincide, these technical things may coincide with new rhetoric being started. And my God, I mean, what's a quarter point rate hike gonna do? I mean, is it gonna break the back of the U.S. economy? I don't think so. So again, these low rates are here to stay, and the stock market likes those in general. Let's take a look at Hershey really quick. All right, so again, pretty bullish situation that happened last week. Profile appearing well below. That's bullish in nature. And again, I'm making this real simple. Here's the 240s. You don't have anything to really play defense on the dailies or the weeklies, so that's all we have to look at there. All right. Going back to the scanner, I want to look at a sort here. See if we even have anything qualifying in this realm. All right, Bed Bath & Beyond. Let's take a look at this one. So the reason I chose this is one of my favorite sorts to try to find things that just might have kind of lifted their head up a little bit. Bed Bath & Beyond, below profiles in the weekly, kind of getting to their ultimate rally point on the daily. So here's the daily, getting back into 44.84. Here's the weekly. Just a stock that just can't get out of its own way. And now you got a chance on Friday. We rally back up into 44.84. Here's Kohl's. So here's the weekly on Kohl's. Again, brick and mortar, tough times. We have rallied up into, even though we've been in a protracted downtrend, we've rallied up into 41.46. Okay. Let's hit some ETFs really quick just to get a bearing on these. Let's look at the XLF. Again, my feelings on this one. You got better things to put mental capital and physical capital to be long than the XLF. Let's take a look at the XLU. 51.65. Again, I like playing defense on this. I think rates could go lower. Bonds and notes go higher. That would help the thirst for yield in the XLU stocks. I don't think that trade's over. XLE held up pretty well here, folks. And that's why, looking at crude oil, how it's pulled back and trying to find some opportunities in the XLE sector, going into the ETFs and looking at the energy sector right here. Still got some decent opportunities on the long side. And you really, in the long run, you want exaggerated moves in an underlying instrument like crude itself, pulling back to really clarify who doesn't want to be sold. Here's our little buddy, Southwestern Energy. Talked about getting a pop. We had a close last 2 weeks above 14.15. I think you can look at that playing defense there for another move up in SWN. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Take a look at some XLE stocks. Let's take a look at Baker Hughes. This is an interesting one, actually. So again, not exactly selling off with crude oil here, and breaking out on the daily, compressing up into the weekly. This one looks like it. The worm could be turning here for first time in a while on the weeklies. If you'll kind of see what I'm talking about. The good news is on this one, we've been in a downtrend. You kind of been compressing into tighter profiles. Higher lows, lower highs, and this could be breakout potential on BHI right now. Let's take a look at Chesapeake. Let's see here. Yeah, I'd stay away from this one. Marathon MPC. This is, I think, a stock we talked about last week, kind of really showing some strength. These weekly infra highs run 36.32. Really like how this stock is acting, and really like how it's busted out. The weeklies have held and it's busted out on the dailies. You could get more of a ride up, any type of moves up in crude here. Let's take a look at. That's not guaranteed, by the way. But when you're trying to trade bounces in the underlying instruments, sometimes it's better just to drill down into the stocks themselves and find things that are going to be the easier trade if crude continues to go down. Some of these stocks in the XLE might not go down, and it's a great way to trade. I've always, so once I feel like it's cheating sometimes, but again, it's been a great way to look at markets in general. Let's take a look at Schlumberger. Talked about this last week. What do you do with it? I like this as a long a lot, and I like Exxon actually. Based off those weekly unfair lows we talked about after the announcements came out. Anadarko, APC. Again, these stocks are really, really hanging in there, and you've got breakout potentials on the weekly above 55.78 on APC. All right, ConocoPhillips. Here's the situation here. This is kind of Custer's last stance on this thing right now. 39.31. You got near that area last week. Let's take a look at COP really quick on the E-signal charts. Looks like we're printing this morning 40.50. So again, you've got some good places to play defense here on ConocoPhillips. If you're looking for stocks that have pulled back into support and crude may bounce a little bit here, you've got 39.31 weekly unfair lows. I think it hit to the tick here. Let's see. 39.67, not to the tick. Got close to it. And then you kind of gotten a new daily profile here recently. So what do you get out of this one? I like the risk reward up to 42.63 on this particular stock on COP. Let's take a look at Celgene. Again, an XLV stock, a sector that's just caught on fire recently. What do you do with this now? You do have some resistance up here at 113.25. So, again, you're going to have to wait for pullbacks on this one. Guys, you've been great. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.